Most payment options in Uganda are through cash transactions or mobile money. But the Bank of Uganda has commenced studies to understand new options for holding money, like the central bank digital currency. The central bank digital currency is a cashless digital equivalent of cash for use by households or businesses.
First is to establish properly what is the rationale. Why must we have it? What issues is it going to help us resolve?
The COVID-19 pandemic is believed to have intensified the growth of digital currencies across the world. At the peak of the coronavirus infections in Uganda, many people opted for cashless transactions to avoid contact and for convenience. But advocates of central bank digital currencies argue the system will move money even faster than traditional forms of mobile money or cash to facilitate trade at a lower cost and in real time.
Maintaining a cash economy is very expensive for our central banks. That's why they are now starting to realize that digital currencies are going to help them, because cash is expensive and it's opaque. You know, a lot of laundering happens in cash because you can't trace cash. If I pay you now, BAU doesn't know the value of transactions that has happened right now. But with digital currencies, the central bank now starts to get a sense of the actual economy, the real economy, and the value that is being exchanged in the economy.
Plans are underway by the central bank to revise the financial laws to enable the adoption of a central bank digital currency. Interest and work on central bank digital currencies is global, but the drive for their likely issuance is shaped by local conditions. In Uganda, there are fears of possible risks to financial inclusion, especially in rural communities that have limited access to the internet. Regulators are hesitant to phase out cash for fear the move would adversely affect rural populations and the elderly.
Issuance has technology implications. Technology architecture will come at a cost. So we need to have an understanding of how much that is going to cost, so we need to look at the cost implications. There are risks related to possibilities of cyber attacks. That is always there.
Some traditional financial institutions like banks are also worried they may be edged out of business as central banks move to cut costs on moving money around.
And then there is the retail, where the central bank issues it directly to the customer. Now that one is of course the most efficient, but it's also the most dangerous. Because once they do that, then you don't need a banking system. Because the central bank will have, in essence, become a bank serving customers, and it will be the cheapest way. Money transfers will be free.
Regardless of the divided positions by different central banks, digital currency experts say it's only a matter of time before digital currencies become the first choice when transacting. Michael Balekes, GTN, Kampala, Uganda.